Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing today? Hope you're having a great day here so far. This is a quick show that we do. We call it the Closing Beat, just a quick way to review the stock market for the day, let you know what happened. The good, the bad, and the ugly, we'll cover it all. It's a daily update. We're long-term financial advisors here. We help you with your retirement. We help you with your long-term investments. More importantly, we help you with your dough. We really want to sort of say, here's the first spot where people can go to and actually get help with everything if they really want to. And so we do that in a number of different ways. One of them is the classes that we do for our customers. Every Thursday we do a class. All the replays are available in the dojo, we call it. Sort of like a little financial Netflix-y kind of thing set up in there for you. No class this week, but if you're thinking about opening an account with Jazz, by the time you get your account open and roll in there, you should be able to join us for our next class next week where hopefully, if all goes as planned, when you're in the dojo and we go live, it should just pop up and you should be able to chat with us and everything inside there. We've been working on that, trying to build that out, and so far so good in our little tests there. So look, our goal really is, if you have a lot of money, then someone's already calling you. There's already somebody that's saying, hey, let me manage your money. You got a lot of money. My thought was, what about the people that have yet to get to that point, right? How do we take a bunch of people and get them to that point rather than go hunt down all the people that are at that point? That's where all the financial advisors are fighting. There's not one financial advisor that ever says, hey, put $100 in and let's see what's going on there. That's what I want. I want to help all my little babies, whether you're younger or older than me. I want to help you get to that point in any means necessary. In tomorrow's video, if I get a chance to get it done, we're going to actually cover how we helped our customers with their 401k, specifically one in general, which we don't even manage. We just help you with it to make sure it's all dialed in. Huge change, and when you're able to quantify that for the individual, meaning you're able to actually show them the difference between what they have and what they're going to have going forward, holy cow, not only does it take the emotion out, but it also lets them know, all right, yeah, I'm getting my money's worth here at Jazz. Look, if you only put in a couple $100, max you're going to pay me in a year is $75. That's it. You ever looked up a financial planner? You know, there's a lot of great ones out there. It's certainly worth it, but money. So check us out at Jazz Wealth. I hope you will. We're going to talk about the stock market now. Also, we're playing a game, bottom right-hand corner of your page there, just to keep it fun. We were going to do it over the summer, but I think we'll stretch it out for the rest of the year if you guys enjoy it. Record number of submissions for this week. We'll announce on Friday the winner. Last week's winner was David. He chose to open his account here with us and just have the $100 put in there. But if you don't want to, you don't have to. You can play, no strings attached, no marketing included. You just take your guess. Where do you think the Dow's going to close? It's been rather exciting given how the Dow's been swinging back and forth. And if you're the closest, without going over, Price is Right style, we'll send you a $100 gift card. If you're one of our customers, you can take the gift card or you can have us credit your account. And I get this question a lot. If you've already maxed out your IRA or your Roth IRA or whatever, you know that we can still credit you that money and it doesn't count towards your contribution. So a way to get a little extra money in there and get that growing here. Anyways, let's talk about the stock market. We've got the Dow higher by 240. It seems like a lot. We've got the S&P higher by 23 and the NASDAQ higher by 71. It felt more of like a day where we were saying, all right, give the Dow a chance to catch up. We've been talking about the Dow lagging behind a little bit. We'll cover that here, of course. And even though the Dow, I mean, I know it wasn't like, you know, rocket ship higher than the rest of the markets, still, if you look at where it was and where it is going, looked like a chance for it to catch up, and of course we'll cover that. In political news, you got Trump out yesterday saying, hey, we're going to focus on some capital gains tax, maybe some payroll tax cuts, and then today he said, nope, not going to do it. Come on, man. You know, like whether it's Democrat, Republican, or the guy from Starbucks, if they do something good, I'm going to cheer them on. If they do something bad for our dough, I got to give them a little grief. How do you tease people that you're going to do something about capital gains and you're going to do something about payroll taxes, and then the very next day just take it away? He said, well, I don't want people to think that I'm just treating the rich people here. Please do. Help them out. Help us out as well if it goes along the way there. Well, it all boils down to elections. The Democrats basically said yesterday, you can propose anything you want, but we're basically going to board up our shop here. We're not going to let you have any wins until the election because we're in that time period now where the games are going to start being played there and things get a little tougher for the sitting president there. Anyways, he also said that he'll probably make a deal with China. Don't really have to, but we'll probably do it. And it's like, come on, man. Like, we need some sort of certainty. I always tease you with the markets there saying, hey, the markets like certainty. Whenever there's uncertainty, you get a lot of action, a lot of back and forth for the day traders and stuff. It was just sort of a mess. Anyways, the Fed minutes came out today as well, and the Fed basically took their chance to, well, really, it's just the minutes of the meeting that we already knew existed, and they continue to focus on tariffs as being the main headwind for the overall economy. They put the ball back in Washington's court to say, hey, it's all tariffs. Get rid of the tariffs, the economy would do just fine. Don't tell us to cut rates. You get rid of the tariffs. So you get this little back and forth there. Anyways, let's take a look at the markets here if we can. S&P on the charts, I'll use the SPY to take a look, though we're going to use the futures today a little bit just because of what's happening after hours here. The S&P 500 very much still inside of this range, trading back and forth, very reminiscent to back here in October where we were just trading inside of a range and eventually people got tired of it and sold their positions. You got the same thing sort of happening here, just a little bit faster. There's a known resistance up ahead here, just these prior highs. Everyone and their mother, whether you like charts or you don't like charts, whether you're short-term, long-term, we're all looking at the same area. What's that tell you? You got Jackson Hole tomorrow and Friday. It gives the Fed the chance to redo some of what they did in the last Fed announcement, give us something to be excited about. There's a chance we break out of highs there. So we have known resistance overhead, but we also have a potential catalyst to push us above those highs should they choose to do that. Now, there's still a lot of underlying weakness, and that's sort of what I want to cover today is just that underlying weakness that we mentioned yesterday. But here's the S&P 500, and then, of course, support right down here at these lows, though a lot of people seem to think if we break those lows, we get our 10% pullback, which we haven't had yet. So that'll put you down back towards these prior lows here. We'll highlight that as we go. After hours, the S&P is a little bit higher, trying to break through those highs. That's just on earnings, some of the retail earnings pushing us through towards these highs here. You also have the Dow. If I can go to the Dow Futures real quick. Dow Futures moving higher. Also, they have the same resistance area, but now you can clearly see a little bit behind the game, still trying to play catch up, although adding a few points after hours here. The NASDAQ 100 very much at those highs, a little bit stronger. Did an interesting study today just to check it out. The NASDAQ 100 has just been beating the S&P 500 in general. If you compare the two together as a whole, they have yet to cross into all-time highs. I was thinking about making a video out of that. I don't know if it's all that interesting. The point being the NASDAQ is clearly the leader here, even if only by just a little bit. If we go over to the Dow, a couple names in the Dow that you want to focus on today. Home Depot hitting new highs, 1.5%, hitting new highs in sympathy with Lowe's. Lowe's reported earnings actually today. They beat on earnings, beat on revenue. Sales growth actually came in better than Home Depot. You don't see that. I mean, I think it's been over 6 years since we've seen that happen, which leads you to think like Lowe's, are they catching up a little bit? So if we go over to Lowe's, they've been sort of the underperformer relative to Home Depot. I did a correlation, what did I do? A pairs trade video a while back when I was out of town. I posted that for you guys to just kind of show how people do these pairs trades if you're interested in that. And Lowe's and Home Depot is always like the default example because they're the two clearest, cleanest companies you can look to and say, they should be correlated for the most part. We get it if one of them underperforms a little and one of them has some weakness as the sales go back and forth between the two companies. But anyway, so you got Lowe's higher on the day. And again, sales beating out Home Depot. So Lowe's adding 10% on the day. If we go over to some other Dow stocks here, Home Depot we just pointed out. We'll talk about Boeing here. Boeing higher by 2.5%. They're hiring more people in anticipation of that 737 MAX getting airborne again. You notice how you haven't seen that in the news a whole lot, right? They're working hard trying to get those planes back in the air because they literally have them sitting in parking lots right now that they're making them, and as they come off the production line, they've got nowhere to send them. So they just put them in the parking lot, tell the employees, park down the road, we'll send you a bus. So Boeing, a little higher on the day. However, just came out that they lost that $1 billion, they call it a kill vehicle, which was to shoot down missiles and things from North Korea. And they lost that contract. That was about $1 billion contract. So did they go lower after hours? Are we moving a little bit lower here? 3, 4? No, not really. Not really a big deal so far. Maybe that news is just now coming out. And so if you take a look at Boeing today, obviously had a good day helping out the Dow. I think it was the best performer in the Dow there. So gives you an idea of a couple of the names that are helping things move higher in the Dow. Again, the Dow is a little bit behind, so still trying to play a little bit of catch up there if you're following along there with the Dow. Let's take a look at some of the NASDAQ names. Tesla really is going to be the focus. We'll pull it up here. Yeah, let's go back. We'll pull it up. Tesla lower by 2.25% today. Walmart is suing Tesla. I brought this up last second yesterday in the classes. That was coming up. Tesla getting sued by Walmart. Walmart says those solar panels that you've put on our roofs, which, by the way, Tesla licensed some of those roofs. They didn't just get their permission and Walmart didn't buy them. Tesla was using that as sort of a model. So they licensed the rooftops of Walmarts to go ahead and just do that. And in exchange, they participate in some of the revenue from the energy savings. Anyways, Walmart is suing Tesla, saying they're catching on fire. We want you to take them off every one of our buildings. That's 240 stores as their test run there. Tesla's like, whoa, whoa, hey, wait a minute. Let's talk about this. I mean, you're sure it's not something else. Let's see what's going on. Walmart says, nope, take them off our buildings there. So Tesla getting a little bit beat up here in the short term. In the S&P 500, talk of the day is going to be Target. Best day on record. You cannot find a better day for this stock. 20% gain on the day. It has officially never done that before. It is at all-time highs. Target and Lowe's were the dominant sort of headlines there. And so when you look at things like Target doing well, competing against Walmart, Amazon, things like that, and you look at Walmart last week reporting earnings there and doing well off of that, you look at that and you go, okay, retailers, which were supposed to really struggle with these tariffs, they're largely sort of fighting that off right now. Now, the key will be first quarter 2020. We'll see what happens there. But to really see the effects of these tariffs, if there really are any, or how they pass them on to customers, we'll find out going into first quarter. That'll be the real earnings excitement there. If we look at Amazon, then it just made me think today, like, where's Amazon? I brought this up yesterday, how Amazon was sort of the weaker of the group there, not really participating. You notice how Amazon's been quiet, losing a little bit of steam to some of these other retailers, which for the longest time, there was the thought of Amazon dominates everything and therefore nobody else is worth anything. There's actually even ETFs that are called, what is it called? Amazon Killer? I think it's called Amazon Killer. It's an ETF that basically focuses around Amazon and names like that, but unfortunately is not performing well. Amazon added 1.25% today, but year to date now, you've got Target, eBay, which doesn't get mentioned much, but they deserve a little mention every now and then. About a 1% gain there. Ulta Beauty, Best Buy, Dollar General, Home Depot, Ross Stores, Lowe's. They're all beating Amazon in terms of returns year to date. Again, you don't see that often. That's usually not something you come across there. So something interesting to point out there. Retailers did well in the S&P 500 today. Tapestry higher by 3.33%. That's one of them we did a video on, so just highlighting that one. Kohl's was higher by about 5%, although that's a big old mess here in the short term, just back and forth at Lowe's. Not Lowe's the store, but at price Lowe's. So not really good there if you're holding or looking at buying something like that. It was exciting today, but still a little rough. Gap was higher as well, 4%. Some of your leaders in the retail space in the S&P 500. They also report earnings tomorrow, I believe. Yeah, Gap tomorrow, expecting 53 cents a share. So we'll see what happens there. But Gap to report earnings, and that was one of the better performers as well. And the S&P 500 on the downside, you had Aflac down about 5.5%. Big down day there. Highest volume we've seen all year. In fact, over a year, the highest volume we've seen. Got some issues in Japan, maybe on the way they were issuing their policies there. Might be some double pricing, some overpricing. And I believe it was the Japan Post, which is actually that either broke the story or this is where it was headed to. Aflac obviously looking into it. They're going to try to fix it. But today, a brutal day for Aflac. I think it was your biggest loser in the S&P 500. All right, sector-wise, we're going to start with bonds. So bonds here today, you got bonds moving back towards lows just a little bit. However, the 10-year to 2-year, that inversion that everybody's talking about, inverted again. Remember the other day, it inverted for a brief moment throughout the day and then went positive. Today, it did the exact same thing. Inverted just a little bit throughout the day. Closed the day about a basis point apart, so that the 2-year still technically cheaper or yielding less. But in general, that inversion creeping back up into the story again, no doubt that will be a story and a headline going into tomorrow because of Jackson Hole, right? You got the Fed and the media and everybody meeting in Jackson Hole. Beautiful place there. And so that's going to be a topic for conversation there as well. At least some of the questions they're going to get asked. You betcha it's going to be in the news. Hope you're ready to talk about that. If we take a look a little bit further, let's dive into some of the sectors here. If I can pull the sectors up, we'll focus in on home builders. Home builders had a great day here today, up about 1.5%. Home builders just in general, you got earnings there. You got some strong refinance numbers that came out, some existing home sales that come out. New home sales, I think, are due tomorrow. No, they came out already. So new home sales looking good as well. In general, though, if you were to look at home builders, things look really good here. But let me just take a second. We go all the way out here. If we zoom out to before the whole financial crisis, back here, 07, 8, 9, all that, we've yet to really break to new highs. So the short answer is we got to get up to where we were in January in order to recover from that. So even though home builders are getting a lot of attention right now, still some work to do before we can even say we've recovered something that happened 12 years ago. So very interesting there in home builders. Naturally, lower rates, of course, are helping them. And those that have reported earnings already, Toll Brothers and a couple others, regionals, they said that the lower rates definitely helping traffic. Now, traffic doesn't mean sales just yet. Traffic means they're coming in, they're thinking about it, they're asking about pricing and everything. Maybe it turns into a contract, maybe it turns into a close. Those numbers are all reported independently, and we'll try to bring them to you if you find that interesting along the way. All right, let's take a look here. You got consumer discretionary higher on the day by about 2%. Home Depot, Target, and Lowe's, Home Depot, Target, and Lowe's, they make up 15% of the XLY, or the consumer discretionary space there. And so obviously a good day when 15% of them had monster days here today. So looking pretty good there. Retail also higher on the day. We've already pointed that out. It's retail earnings, so it's their sort of spotlight right now to take over and show good things. And so far, so good. You got Urban Outfitters, TJ Maxx reporting earnings as well. Urban was higher by 7%. And I think TJ Maxx had a great day as well by about 4%. So a good little reversal there on TJ Maxx. So here's the question. Who's making the real progress, right? I keep mentioning all this underlying weakness. Why do you keep saying weakness, Dustin? What's going on? Help me. Teach me a little bit here. We know from just beating this to death every day, utilities sitting at new highs. We know that REITs are sitting at new highs. ICF, you can use FREL, whatever you want to use there, sitting at new highs. We know consumer staples sitting at highs. Everybody's moved into those areas. Those areas, if you were to compare them to the S&P, NASDAQ, whatever you want to compare it to, if you were to compare them, you would notice, hey, if we're sitting at highs in the XLU or in the REITs and things like that, but yet the market is still down here, there better be a lot of other areas that support this market. Utilities, REITs, they don't make up a huge chunk of the S&P 500. We need the big guys. We need the financials. We need the tech stocks. We need all of that support. Healthcare even. We need that move to get things going here. So let's take a look through some of the different things here. Oh, I got the wrong list put up here. All right. So you got retail. Look at it compared to the S&P 500, sitting near lows, right? Tech stocks, not bad, but not leading the way here. I mean, I would say maybe a little bit better than the rest of them, but not compared to utilities, not compared to REITs. We're still waiting on some of that real strength there. Transports bounced off the 10% decline number there and really haven't had anything getting to get started there yet. If we go to healthcare, let's use the XLV for that. Healthcare, supposedly Goldman Sachs says all of the hedge funds are moving out of tech and they're moving into healthcare. They're starting to pick healthcare stocks. Well, we see that a little bit from the most recent decline. It wasn't as aggressive as the rest of the market. But however, you have no real action there yet. There's no leadership. Maybe we're close. I drew some trend lines for you just so you could take a look there. But we really have nothing yet to be excited about. Energy, right? Nothing to be excited about. We're still sitting near the lows there. Industrials, we're still sitting, come on, load, perfect. We're still sitting near lows. We're not getting anything done, right? Banking stocks, still sitting near lows there. So the point that I was trying to make is you have these areas of the market that are really important that aren't playing along yet. And so in order to really get that push through the resistance area on the S&P that we talked about earlier, you can't have just the utilities. You can't have just a little excitement in retail. You can't have a little excitement in REITs. You can't have everybody flooding into consumer staples. So you got to break the market down in pieces and go, why is the S&P not moving? Why are we not getting any real action here, really in any index across the board? And as you look around, it's because you don't have those leaders there, right? So I wouldn't get too excited here in the short term. You certainly hope we do well and everything's good, but you have every reason to believe that there's still a possibility of some weakness to the downside, in the short to mid-term here, because you just don't have that leadership there. So I wanted to point that out, and we'll try to keep an eye on things like that so we can help you out along the way. All right, let's, what are we going to do? Let's go over to the stocks making new highs. You got 42% of the stocks in the S&P 500 hitting new highs. Remember, that's just a number. What does that number tell us? Why do I read that number off to you every day? Well, think about it. Yesterday was 38%. The day before that was 45%. Let's go over to the charts real quick. Let me see here. If I just zoom in, did we not just recover all of yesterday and essentially finish right where we were 2 days ago? If that's the case, and we still don't have as many stocks over the 50-day moving average as we did 2 days ago, doesn't that also lend a little credibility towards underlying weakness, right? If we've yet to go back, right, all the stocks that fell, the 42% that were above the 50-day moving average, those that decided to break below yesterday, understandable. It was a pretty nasty day, a decently down day. Okay, fine. But if we recovered all of it and we did not get all those stocks back, not even really close, 42% versus 45%, technically that's not really that close. We don't move a lot usually. So you go, okay, there's still something going on. There's still some weakness there. Those weak areas didn't all come in play today, which now you can see. So we're putting little pieces together, and that's really what I do this show for every day, is not to tell you, like, go buy this stock, or Tapestry's oversold, Cisco's oversold, Netflix, the stats of it going higher. I don't do that so that you guys want to go trade. I mean, you can if you want. But the idea there is to say, in this sort of short to mid-term, what are we expecting, right? Is the market behaving normally, or is something a little off? And when you notice something's a little off, you can either get excited if you're a long-term investor and say, well, great, I hope that means we pull back. I'd like to add a little bit of money into my long-term stuff. I want to get a discount. Or if the markets fall, you could say, okay, well, I mean, that's kind of where we were at. It's like the REITs. We were talking about those the other day, that public storage space, the idea of those pulling back. There you go. Your extra storage space, the idea of those pulling back. Statistically, they're ready to pull back, and they are pulling back. But if the market can give you that sort of, if you could put those pieces together there as well, gives you just all the reason to either get excited about it or just say, okay, I don't expect fireworks. If I get fireworks, okay, that's cool. It's nice to see. I mean, you know, it gets everybody excited. We like to cheer that on. But if I don't get those fireworks, I understand why, you know? All right, so let's take a look here. We got new highs, 25 new highs today. 7 sectors were represented in the new highs today, so that's good. 8 was a record there. 7 sectors represented, but there's not a whole lot of names there. There's only 25 names there. Today, only American Tower was the only REIT to hit new 52-week highs, at least as of my last scan there. You had a home builder hit new highs, Dr. Horton, 1.1% gain on the day, doing well, obviously lending some of that support to the home builder sector there. And so that's really it. Hershey, I think, was in the mix there. Hershey's been performing well. Nice, tight, strong stock there well, really since the beginning of the year. Pretty much a straight uptrend there. And you got 6 new lows on the day. You had 2 REITs that were in new lows, but they were in the retail space. You had Simon Property Group, SPG. In fact, any of these that are in that sort of retail mall store building kind of REIT space, they all suck, right? They're all doing really, really bad right now. That's a fancy way of me saying that. Macerich, however you say that, also hitting new 52-week lows. They're in that REIT retail space as well. Hard to say. Speaking of retail, you got Macy's hitting new lows. It poked to new lows, basically finished flat on the day. It's down 50% on the year so far. Do you like discounts? You know, we always talk about discounts, and then you see these stocks fall, and you go, ooh, that's nasty. I don't know, man. 50%. What do you think? That's the tough part. When you're buying individual stocks like that, you see them discounted, you kind of go like, oh, something might be wrong. I don't know. Sticking with retail there, Target, of course, best day ever. Beat on earnings, beat on revenue, 3% or 3.4% gain in their overall store sales. That's good. That was a beat as well there. They guided higher as well. They really had nothing negative to say. Target just kind of said, hey, take a look at our numbers, and then just sat back and was like, yeah, talk about us today. Go ahead. Don't take a commercial break. Talk about us. The other day, the markets fell and you didn't take a commercial break. We had good earnings. Don't take a commercial break today. Go ahead and just talk about us all day. And, well, they pretty much did there. We covered Tesla getting sued by Walmart. We'll keep that on our list here so we can keep track of that one there. Alibaba. Some of you are into this Alibaba, so I got a lot of questions on it. I'm going to just cover that one real quick. Alibaba down 1% today. They delayed their Hong Kong listing. They officially delayed it. Said, look, the protests going on over there. We want no part of it. Let's get that straight first. Then we'll list on a Hong Kong exchange. It's like 50 billion US dollars that they're trying to raise over there. So Alibaba a little bit weak today because everybody was expecting that. They do have the 8-for-1 split coming up. I don't think I saw anything about that. No, that's going to go forward there. So if you like the idea of Alibaba a little bit cheaper, you're going to get that here soon. Cree, these guys make light bulbs. You know them. If you go to Home Depot and you pick up a light bulb, chances are it's made by Cree. Stock was lower by 16% on the day. Look, they beat on earnings, beat on revenue. Guidance going forward was the weak spot there. They said, look, between what happened with Huawei, what's going on with China, and the people not wanting as many LEDs. They probably bought them all already. Remember, we're past the LED craze. Everybody went out and bought LEDs. They last forever, and so they're seeing weakness in the LED space. So they lost 16% on the day there. You got Nordstrom reporting earnings after hours here. It looks like it was pretty good. Oh, almost. I mean, yeah. They beat on earnings, beat on revenue. Sales of their... Is that the same thing I'm looking at here? Yeah, they guided lower. And the most important metric, can I find it? So Nordstrom sells the high-end stuff, and we all want to know, how were you able to sell that high-end stuff? Were you able to sell a lot of the stuff at, what do they call it? Full price. Were you able to sell that ridiculous t-shirt for $75 and actually get $75? No, they were not. So full price sales lower by 6.5%. That's not a good sign for them in general, but I think the stock was still a little bit higher. Went from 26.5 to about 29. So a little boost for them after hours there. There may have been something else that I missed. I didn't catch it. Sorry, I didn't get to look that one up. I just looking as we go here, which is a lot harder than it seems. I make it look easy, don't I? Tilray, cannabis stock, was in the news today. If you like the pot stocks there, Tilray says, hey, look, we don't make a profit right now. We get it. We're not going to make a profit for now. But in Canada, in the next quarter or two, we're going to make a profit. And those aren't my words, those are his. He literally said, in the next quarter or two. So stock was a little higher today, 10%. Tilray is down 60% year to date. Discount? Makes it tough, right? All right, I'll be happy to answer some of your questions there. While you're asking your questions, let's take a look at earnings going up tomorrow. More retail. You got BJ's Wholesale, you got Dick's Sporting Goods, Gap, we mentioned already, Ross Stores to complement TJ Maxx, and then you have some other ones too. You got Hewlett-Packard wrapping things up. Salesforce is going to be a headline one that comes out tomorrow, expecting 47 cents a share. There's a hint of a little weakness there in Salesforce fundamentally, so we'll see what's going on with them. And VMware, $1.55 expected in terms of earnings, so we'll see what's going on there. Harry likes Alibaba at 145. I could understand if you said, look, I see right where Alibaba is right now. I see that resistance. I either buy above it and get the all clear, maybe back towards the 190s or so, or I wait for that sucker to pull back and have another drop back into that prior support. Harry's waiting for 145. That means you would get new lows. By then, I would think that split would have taken place, so divide that by 8. Dan says, what do you reckon on Salesforce? I get the suspicion that they're going to come in a little light. That's just because of what the CEO was saying there. I think people have already sort of figured that out. Remember he gave that update 2-3 weeks ago when the stock fell. Can I pull it up? I guess it's been about a month now. No, the end of July when he kind of gave that update that things were a little bit weaker than they'd expected. Remember, he's a cheerleader. There are some CEOs that are kind of just, you don't even know who they are, right? And then there's the Salesforce guy. He's very much a cheerleader. He's like the T-Mobile guy. Very much just a cool, laid-back guy that is not afraid to kind of say what needs to be said. And so we got a little hint of that. I think that's going to bleed into earnings only because of what he said. But that's just my guess. I obviously don't have any inside information. Tandra, do you think the stock market pullback is over for now or more to come? We're going to find out, right? We are at the decision point. We are, as far as the S&P goes, we've moved up to an area where it's time for traders to decide if they're going to push through that area like a big ceiling. Are you going to try to push through, or are you going to back away and take a break for a while? We're going to know very soon because of where we're at. It's kind of like healthcare. We're at a real decision point right now. Either healthcare gets up and gets rolling, and Goldman Sachs is right, or we continue to chop around and bleed lower and break through the lower end of that. So we'll see. Given the way the markets have been lately here, anything's possible day by day. You could tell we're one comment away from the president from pushing the markets higher or lower. And now we've got the Fed, so the Fed's helpful as well. Philip says, can you explain a stock like Shopify? It's been above the 50-day moving average for months now. Is that normal? Totally normal. Yeah, Shopify from last check has been a nice sort of steady uptrend there. And when that happens, as long as it doesn't go too far too fast, then everything's cool there. So you got a real steady, slow uptrend like Hershey. We talked about Hershey a minute ago. Real steady little uptrend there. What you don't want to see is that it pulls away a little too far too fast, right? Look at what happens when that happens. The stock pulls back abruptly. And that's just because people get excited. They have a nice profit. Look at things are going well. Holy cow, this is great. And then it starts to move away, create a little white space between the moving averages there and where the current price is, and people get excited. They want to take their profit. What's happening now? Creating a little white space there, right? So you got to expect that if this gaps higher or has a really strong up day, it will be followed by a pullback. We'll try to get the stats on that for you if that happens, so we can see probabilities of things moving, pulling back. For things like that. But that's Shopify, obviously a really strong stock. It is normal for the uptrend until it starts to just get a little ahead of schedule there. Yep. Sorry if I missed some of your questions there, but I'll try to. Can I catch back up? Ask me again if you have the question there. Do you think the Fed cuts rate again in September? What happens if they do or they don't? It's not really up to me at this point. Traders are saying yes, they will, 100%. They're placing their bets as if they will. We should know more in the next 2 days, but it seems at this point they're kind of backing themselves into a rate cut move. The problem is they have to figure out what wording do they use, because in the Fed minutes here, they used every word to say this was sort of a reset, insurance cut, things like that. Well, if that was that, then what's the next one? Isn't that a negative thing if they cut rates again? Aren't they essentially saying, we see what the markets are doing. We see that bond yield over there, the 2s and 10s. We'll see. It's going to be exciting. Is now a good time to pick up Redfin and Zillow? Two different names there. You want to do a little research there if you're thinking about investing in those. Zillow's got a whole different game plan here in the short term, and they're paying for it because it's not quite working out yet. I don't know that it does or not, but they want to sort of conquer the world there, and if they do, it'd be amazing. But right now it's costing them a lot more than it's actually worth, or at least in the short term. So the stock getting a little beaten up there. Redfin's a little different, listing service, kind of a different scenario there. They don't have the same ambitions as Zillow. They're just happy to be where they are. They really don't have anything exciting on the plate as far as we know of. And so for that reason, you have the stock moving sideways. That's a tough one. I like discounts, but I don't like what Zillow's doing in the short term here. It's a tough one. Yep. Is Italy a concern or just noise? Italy's been a concern. Argentina's been a concern. Venezuela's been a concern. Germany's been a concern. The UK's been a concern. It just doesn't get a lot of attention here. India's been Taiwan's been a concern. And so right now, the media is like focused over here. Those could very easily dominate the headlines. And I'll bet you, if we start falling because of this yield curve thing and they blame it on that, they'll start sneaking in all that other stuff too to say, holy cow, look how bad everything really is. Well, it's already kind of bad out there, over there. Daniel, Zillow's been buying homes themselves, pretty controversial. Pretty cool, it's just not working at the moment for them. They got some tweaking to do. It happens, you're trying to grow a business, you make a decision, it doesn't work out, you got to know when to either dive all in or just cut it and move on, right? Lots of countries with negative interest rate. Yeah. Yeah. Well said, Bob. What should be the investing recommendation for a Friday Fed announcement? I don't know that you do anything special because of that. If you're a short-term trader, you're looking forward to the volatility there. If you're just trying to position something long-term for that, I don't think that's a worthwhile adjustment to make. Right? You don't want to start making major portfolio decisions because of one little thing. That's like someone driving a massive cruise ship and there's a boat way out there, just like a little, 32-foot contender or something, and he's blazing away. Looks like he's coming at you. You're not going to turn a boat because of what you see on the horizon. You're going to say, well, let's just see. Let's see if we can contact him. Let's see if he notices us. Do we see what's going on there? We're not going to turn for just now. That's kind of how I feel about that. Is now the time to pick up American Airlines? That's a tough one. If you did pick it up, you're kind of concerned that it's not bouncing just yet. If you're familiar with options, you may want to use options just to be sure there, if you like being on the sell side. You took 30% of your money out of a bond fund and put it into REITs. Okay. You like the REITs? You like them continuing to push higher there? Cool. Nice. What time is the Fed meeting on Friday? It's actually all day, tomorrow and Friday. So it's a whole symposium. They do a whole thing there. So that's that one. There is no Wine and Wealth tomorrow. Taking a rare week off there. Have some things to set up there and help my daughter out with school and everything. So no Wine and Wealth tomorrow. We have all the replays in the dojo. We'll be back next week, of course. And we're going to try to do it live inside the dojo. So we'll see how you guys like that. That's all I really have for you here today. We'll wrap it up. We'll be back tomorrow, of course, to cover everything. Take your guess. Guess the Dow. See where you think you land there. Seriously, there's no marketing or anything. You can just take a guess. If you're close and you win, we'll send you an email to get your address. If you don't win, we will never bug you. We'll just move on to the next game there. Enjoy the rest of your day and evening, of course. Thanks for watching. We'll see you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.